What's up, guys? Welcome back to the channel. In today's video I will be doing a review of MUX Decentralized leverage trading platform. I'm doing an outdoor edition today. It's been a long time since I've done one of these, but I just thought while I'm out here hiking today, the markets are really looking good. Bitcoin is really looking strong, and so is the altcoin market. So stay tuned to the end of this video so you can know why I think this previously known as MCDEX but now currently known as MUX protocol suite is such an intricate set of protocols that are actually designed to provide traders with reduced trading costs, substantial liquidity, and a broad spectrum of leverage choices, and also an array of market options. The MUX protocol suite includes a very strong leverage trading protocol itself, which actually delivers no price impact trading up to 100x leverage, eliminating any counterparty risks for traders, and also a streamlined on-chain trading experience is what they try to introduce to their platform. So traders actually engage with MUX native pools, and this is all done on the trading protocol itself. So the MUX leveraged trading aggregator as part of the MUX protocol suite actually is a sub protocol, automatically choosing the most appropriate liquidity path and minimizing a combined cost for traders while also fulfilling position opening requirements. And additionally, this aggregator can actually provide margin for traders and increased leverage up to 100x on aggregated underlying protocols. So let's talk about the protocol itself first. So like I said, it's based on a decentralized system that offers price impact trading up to 100x leverage, self-custody, and aggregated liquidity, also giving you that enhanced on-chain trading experience. Furthermore, MUX is actually a multi-chain native protocol that unifies pooled liquidity across various chains to optimize this capital efficiency. So to get started is pretty easy. You can simply connect your web wallet, that is maybe MetaMask, etc. To actually get the tokens is very easy. All you need to do is pretty much go to the chain and make sure you add the contract address, and you can swap the token from another token. Okay, so traders are actually able to utilize MUX to open these leverage trading positions up to 100x with no price impact. Trades are also at optimal cost, and you get disaggregated liquidity, and there's various types of collateral that you can use as liquidity providers. You can employ MUX to actually supply liquidity and receive MUXLP tokens, and you can stake these to earn protocol income. That's protocol fees by this is obviously third-party DEX mining yields, and also MUX token rewards. The reason why I'm really going hard on these types of platforms is because when I really look at what's going to be successful in DeFi, particularly I look at what protocols are making revenue and how much of that revenue is actually being distributed to token holders, because ultimately this is the one unique selling point of having decentralized exchanges. Okay, because at the end of the day you need the participants to provide liquidity on both sides, and you have to reward them by having utility tokens such as these protocol tokens here that you can use to then get rewards on. So MCB is a really good token at the moment. Of course, the volumes are still relatively low. A lot of these platforms, not a lot of people are quite in tune with what's going on, but I think as soon as we get that influx from TradeFi, especially traders are looking for yield in these decentralized capital markets, I think it'll be inevitable that one of the main criteria they'll be looking at is which protocols are actually profitable. Okay, so the MUX aggregator is something that I talked about. Like I said, it does give you that trading experience and gives that rapid growth in DeFi. Several leveraging platforms as well. Protocols have been deployed across these multiple protocols, but the number of protocols does keep increasing, challenging obviously the need for liquidity to be dispersed across various protocols, leading to this underutilization of some of these chains. And also there's no native method for utilizing cross-chain liquidity when liquidity is fragmented across different chains, and due to significant differences in pricing mechanisms as well, in pricing and margin parameters on each protocol, traders cannot necessarily easily access optimal pricing and trading experiences. So to address these issues, the MUX protocol introduced the MUX Leverage Trading Aggregator, a sub-protocol within the MUX protocol suite to provide best-in-class trading experiences for traders. So the mechanisms include liquidity routing. So this means that when traders open positions on MUX, the MUX aggregator dynamically compares trading prices offered from several leverage trading protocols. Simultaneously, the aggregator also suggests an underlying protocol with the most suitable liquidity depth for your trade. So in leverage trading, the trading cost itself comprises normally of different factors, including price, spread, slippage, price impact, position fees, and other potential explicit trading costs. So these implicit costs as well, such as tax, max leverage, for example, available liquidity, is something also to really consider. But the MUX protocol thoroughly compares the trading cost on aggregated protocols and then selects the most appropriate liquidity path while minimizing the combined cost for traders and fulfilling position opening requirements as well. So they also have these position containers that you need to really just understand. Pretty much the MUX aggregator system itself governs the smart contracts designed to store traders' positions, known as position containers. So when a trader does initiate a position via the MUX aggregator, it generates a position container and employs it to open the position using the underlying leveraged trading protocol on the trader's behalf. Okay, so the position container contract is actually considered the direct considered the direct user by the underlying protocol itself. So moreover, this means that MUX aggregator does open and or offer this API for making sure you can obtain information about traders' addresses associated with these position containers. So each position does have its own position container, which helps to distribute the risk among users, and a critical aspect of maintaining safety as well of this protocol. So you can boost leverage, so that's something that you need to also look into. If you check out the link in the description, I really go in depth on what this protocol has to offer and why I think it's one that you should look at. I also talk about cross-chain liquidity. So that means on-chain trading, especially with leverage, liquidity and users are literally dispersed across multiple chains, and the MUX aggregator does employ the protocol and the universal liquidity mechanism to make sure cross-chain liquidity aggregation is there, ensuring that you guys have a seamless trading experience on different chains. So also aggregating liquidity, which I've already kind of touched on. What's really interesting is also this roadmap that they have. They have the V2, V3, and V4, which is supposed to have a consolidated management of underlying positions as well. And they really focus on liquidity pools comprising of portfolios of assets, with each asset holding a target weight, and pooled assets are actually utilized for MUX margin trading and third-party DEX mining to generate fees. So you can also buy and sell MUX LP tokens. So these are all obviously deployed on different networks, and you can pretty much submit a buy or sell order, and there's an extended pending time, currently about 18 minutes for the order to be completed. And you can also look at their staking, which is something that I really wanted to just focus on. So you can earn pretty much passive income or protocol income from protocol fees and third-party DEX mining rewards, okay, if you're using MUX. And the MUX rewards themselves Okay, and these come in the form of VEMUX logged staking and MUX LP staking as well. And the staking does take place on Arbitrum network. So this is an Arbitrum focused DEX. Okay, so once you kind of acquire your MUX LP tokens, you can stake them on Arbitrum to earn these protocol fees and have this external mining yield come your way in the form of MUX rewards. So you can check out also how you can stake if you check out this article in the description, which actually details everything, and I can also give you a little bit more information on the profits and risks and all of that, and also their referral program, which makes it possible for referrers to earn a portion of the referees trading fees, and you can benefit from this as well if you want to let others know on what they have to offer. So check that out. I do go into the price breakdowns and the percentages of the rebate fees as well in the article, so please check that out. And as far as the tokenomics, it's quite interesting. They do have quite a number of tokens: MCB, MUX, VE, MUX, and MUX LP. Go check out the rest of the article so you can see exactly what the functions of each are. And to long or short on MUX is pretty simple. So in this example, we actually trade the ETH USD pair at 10x leverage with as little capital as just under $5. And we actually decided to take a long position since the markets are looking good. And just to demonstrate, we also did put our take profit at 21.50, so that's $2,150. And we put our stop loss set at 1,915, as you can see here. And all you need to do then is confirm that you want to long and confirm that market order. And once that's confirmed, you can pretty much go ahead and pay the gas fees that are associated with your transaction. And once you've done that, you can confirm the transaction fee, which is pretty low as well on the Arbitrum network, which is where you will be trading on MUX. And then after that, you can easily confirm your open trade on the dashboard as well. So I think this is one of those platforms that is really worth looking a little bit more into for yourselves. So don't be lazy, especially in this bull market that seems that we've now entered. You need to make sure you're doing all your research. For the latest research, make sure you go to our site. Decentralized.news is actually our main website. We've got a resources tab with hundreds of free resources and tools for you guys to really make sure you can navigate your way in this crypto ecosystem, flawlessly. So make sure you check out the links to my books as well. Tokenized Trillions and Blockchain Applied. They deal with real world asset tokenization on the blockchain. Again, like, share, and subscribe, guys. Don't forget to hit the notification bell and check out the links to some of my best trading platforms that I really recommend at the moment. GMX, GNS, that's Gains Network, or G-Trade. I also like Sin Futures, Apex Protocol. If you like trading on DEXs and you want to make sure you're keeping your funds safe, especially when it comes to issues that we've seen in the last bull run with centralized entities going bust, I think this is the way to go. If you want to make money in this space, you have to put in the work. So make sure you check out everything that's on our main site. And until next time, guys, peace and love. Let me get on up this mountain. Peace and love, y'all.